Welcome back, everybody. I'm bald. I shaved my head. That hair was just too much. It was unprofessional, okay? That's why nobody likes my videos anymore or subscribes to my channel. Because of my freaking hair, so I cut it off. So here I am, freaking bald. Watch my channel explode now. Anyway, like my videos and subscribe. Today, we're going to talk about why rich people pay a lower tax rate than regular folk. As in, I'm rich, and I pay low taxes, and everybody else pays high taxes. And I'm going to explain why. Very simple. Rich people, like I'm talking about really rich people, not idiots that spend all their money on cars and expensive houses and are in massive debt and have no actual money. I'm not talking about those rich people. I'm talking about multimillionaires, 10 million, 20 million, 30 million, billionaires, those kind of rich people that actually have wealth. They live off investment income and off liquidating their shares of stock. That's how they live. That's how they get money to, pay their bills and do whatever rich people do. I mean, I would know about that because I'm rich as well. But anyway, they live off investment income and off liquidating shares of stock that they own. Whereas normal people mostly live off earned income, which is wages, salaries, commissions, whatever. Now, the taxation of regular income is divided into tax brackets. And the way that works is the less that you make, the lower percentage of tax you'll pay on those brackets of income. And as you make more income, you pay higher taxes on those brackets. It's a lot to explain, I know. But basically, the more you make, the higher tax rate you're going to pay on certain brackets of income. That's all you need to know. And those brackets, I believe, go up to 37%. And that's just at the federal level. If you live in a communist state, they're also going to charge you extremely high income taxes at the state level. And maybe even at the local level, okay? So your earned income, where you go to work, you're working a job for a corporation or whatever, you're getting taxed at a maximum of 37% at the federal level, plus an additional, 10, 15% if you live in a really high tax state. That's a lot of freaking money to pay for taxes. Oh, and you're paying Social Security, and you're paying Medicare, all that crap. All that's coming out of your paycheck, so you're getting taxed to death for your earned income. What do rich people do? They live off dividends and selling their stocks. And here's the secret about selling stocks. If you sell a stock after you've held it for a year, 1 year, it becomes a long-term taxable or a long-term capital gain. And what that means is the highest rate you're going to pay is 20% on that capital gain. If you sell a stock in less than a year, let's say you buy a stock, it goes up a lot in a couple of months, and then you sell it. That gain is taxable at short-term capital gains rates, which are your marginal income rates. So, for example, you sell that and you're in the 37% tax bracket. You only hold the stock for a couple months. You're going to pay 37% on that gain. But if you hold the stock for more than a year, you pay a max of 20%. 20%. Now think about that. The average person is in the, 22% tax bracket. But if you hold a stock or any kind of asset or most assets and you let it appreciate and you don't sell it for at least a year, 20%. Boom. On top of that, dividends. When a company profits, the money goes into an account called retained earnings. It's the earnings that the company is retaining that they haven't paid out or whatever. When the company decides to pay a dividend to the shareholders, excuse me, Jesus, I just had a bunch of popcorn. When a company pays a dividend to the shareholders, that dividend is also taxed at a maximum of 20%. So if you're super rich and you own a bunch of stocks, you can literally just live off the freaking dividends. Every, 3 months, 6 months, a year, whatever. Every time the company pays dividends, boom. 15%, 20% tax, whatever. That's it. Investment income. Whereas a person that's working, sorry, if you make a lot of money, you're in a really high tax bracket, you'll be paying 37%. plus Social Security, plus Medicare, plus state and local. That's pretty ridiculous, isn't it? That's how it is, okay? I didn't write the tax laws, but that's how it is. That is how rich people pay lower taxes. Now, when it comes to dividends, one thing I want you to keep in mind. Dividends are already taxed once before they're paid out. So there's actually a pretty good logic to why dividend tax rates are low. You know, there's a 0% bracket, I believe a 15 bracket, and a 20 bracket for dividends, which is based on your income. But the reason dividends are taxed so low is that when a company sells a product, you know, they have to buy the product and then sell it. Then they have to, and that's called the gross margin. And then they have to pay their staff, pay the selling expenses, pay the operational expenses of the business. That pays out. That's their, Jesus, I'm drawing a blank on that one. CPA, I know, it's pretty sad. So they pay all their operating expenses, operating income, that's their operating income. And then from their operating income, they pay interest and taxes. And then that money becomes net income, which goes into retained earnings. So that money, that sale that the business made, is already taxed once at corporate tax rates. Then it goes into retained earnings, and then it's taxed again. So they're actually, that dividend is actually taxed multiple times, which is why it's taxed at kind of a low rate, at least theoretically, okay? And when it comes to long-term capital gains rates for like selling stocks, the reason behind that is they want people to hold stocks and other investments for the long term. The government doesn't want people trading stocks, even though they do it anyway. And they incentivize people to invest and hold their investment by incentivizing them to wait and get that long-term capital gain rate. Okay? That's why rich people pay lower taxes. Very simple. Very simple. They don't have earned income. All they freaking do is they have a bunch of stocks and they live off the dividends, or they live off the freaking liquidating shares of the stock. That's it. If you don't like it, whatever. Go vote for whoever. You can potentially change that. But that is the very simple reason. Okay? Hope you guys enjoyed this quick video. If you like it, like the video and subscribe. Have a wonderful day.